Hey everybody, how we doing? Chase here. So I want to go over some of the finer aspects, some of the more advanced details utilizing the Bitmex platform. I'll try to do this as concisely as possible. I'll show you how I have mine set up. Here we're on testnet. I close this, get rid of those. I utilize TradingView to do my charts, so I have no need for them. I widen these up, move this down a little bit, get all the important information that I need in front of me. Okay, so first, let's cover right here quickly. I am going to quickly open a position just so I could show you some things. All right. So here we have our positions. This is where we see, what position we have, contract size. Contract size is related to basically the Bitmex price, right? So if you want to make $100 USD per $100 movement in the Bitcoin price, then you need to be utilizing one full Bitcoin. So at the moment, that would be 6,635.5 contracts. Okay. Here you see your value. Here you see your entry price, the mark price. The mark price is a combination of the index price and the Bitmex price. The index price comes from GDAX, aka Coinbase Pro now, and Bitstamp, their combined price, and then it combines with the Bitmex price. Okay, there's your liquidation price. You should never worry about your liquidation price because you should always be using a stop loss. Here's your margin. Here's your unrealized and realized P&L when you, unrealized but indicative P&L when you hover over it. Okay, so what does this mean? This means when you're not hovering, you're seeing the gains or losses you're taking based off the mark price. When you do hover, you are seeing the price based off of if you closed at market right now. Okay, so let's get this out of the way now. There we go, we closed our order. We go over to closed positions, we see our gain or loss over here. Here we have our active orders, clear, it lags behind sometimes. Here we have our stops, here we have our fills and our order history. Talking about the fills real quick, people often think when they see this negative sign that they're losing money. You're not. All you should care about is the amount of XBT value. Okay, just ignore the negative sign. All right, so let's move forward and talk about the user interface, how to utilize it. Sip of water here. Okay, so first thing we want to do is, first let me show you. You have this calculator here, right? So if you ever wanted to calculate what your, gains or losses could be, let's say you want to go 10,000 contracts on a long, you're going to enter at 6,700, you're going to exit at 6,800. Okay, you're going to use 10 times leverage. There you go on long. If you click it the other way, it goes to short. So green is long, red is short. Here is your profit, 0.0219 on a 100-point move from 10,000. Okay, so let's see. Let's move forward to all the things we have here going on. Basically, first is limit order. Limit order is what you always want to use daily basis. If you can, let's pretend you are the only time you're really using like a market order is if you're playing like a breakout or a breakdown of a formation, or if you feel like you really need to get into position for some reason. And of course, you should always have your stop market set up before you ever market. Why are we using stop market over stop limit? Think back to April when we had the 1,000-point pump candle. Huge orders came in, and a lot of people got skipped on their stop limits. If you had a stop market order, it would have executed for you immediately, and the people who use stop limit got liquidated. I'd personally always rather pay the fees on a stop market than worry about stop limit and getting skipped. Okay, so back to the basis here. Here's your limit order, very basic. So let's say we want a short at 6,800. We'll go 6,800. We'll do a short. There's no need to have any of these buttons clicked. There you go, short. Now we're in the book. Okay. Now let's say we want to short right now. We want our order to get hit, but we don't want to market. We don't want to pay the fees. That's when you click post only. Okay, so now we can try to get our order in there. I'm not sure. It's testnet, so it's hard to get our order in there. There you go. So it popped right in perfectly. If it didn't pop in perfectly, it wouldn't execute because it's post only. Okay. Let's get rid of both these orders. So what is the last functionality for here? Reduce only. Okay, reduce only is for when you have a position and you also have a stop loss on one side. So let's do this. Let's go a market short here. We'll set up a quick stop market at 6,800. This is where we will buy back our short. You know, when you're talking stop losses, your stop loss, why does it say set buy stop? Because you're shorting. So you sold a contract. So if you need to get a stop loss, you need to buy your contracts back. Okay, that's why it's a buy stop. All right, so let's say you want to close this position at 6,400. So you will buy long 6,400, reduce only. Okay, why do we need reduce only? We need reduce only because if your stop loss gets triggered and the price comes back down, then you will open a fresh long. But if you have reduce only checked on, you will not open a long position. Okay, it'll just cancel automatically. Okay, so that's when we use reduce only. Let's see what else we need here. Let's close this at market. All right, so what do we use market orders for? Yeah, that covers everything we need there. And obviously, here's your leverage slider. If you haven't seen my first Bitmex video, you can head over there. That has more basic information to it, and some of the same information probably, honestly. Okay, so when do we use market order? Let's go over to our chart here. Let's say you want to play a breakout on this formation here. So it's bouncing around in here. And by the way, this isn't like a real formation I'm plotting or anything. I'm just using it as an example. Let's pretend you wanted to play the breakout of this formation. You're waiting for a 4-hour candle close or something outside of the formation, you know, whatever it's going to be. Okay, that close comes. You've been waiting for it. Okay, you market order. All right, so at that point you would market long. You get your order in there. Make sure obviously you already have your stop loss set up. As the price starts to creep upwards, okay, you should be moving your stop up. All right, getting ready for when the breakout comes, and if it dips back inside, then obviously it was a fake out and you're not interested. Obviously leave yourself a little bit of room there, but point being, you know, where's the current price? All right, so point being, let's say you'd want to have your stop at 67.14 before you even entered the position. Okay, so there's your stop. Obviously it's a sell stop because you're looking to long, so it'll buy a contract and then your stop will sell a contract. All right, just because we're using one contract, because if you use a lot on testnet, then you get all these orders popping up over and over and over again because there's no liquidity here. Okay, so that is and that's what you'll do. You'll just continue to move up your stops. All right, so once it's getting ready to break out, you'll just keep moving up your stop, moving up your stop, moving up your stop. And that's how you could play that breakout. You can even have stops set up on both sides. Okay, so you could also have a stop set up on the other side. Let's go 65.75. Let's see here. 65.75. Okay, so that will be our sell stop, and then we're going to need a buy stop. I just want to get rid of this other one. And our buy stop would be up here, 68.09. Okay, so what does this do? Why do we need stops on both sides? Let's say you don't know which way this is going to break out. You're playing, you're scalping on 5-minute candles or something. Okay, so here you have your stop loss for the short. Okay, and you can tighten it later. But if this happens to break down and you want to jump in, then you already have this stop set up. If something crazy happened, then it popped back the other way. All right, let's say you're playing the breakout. You already have a stop set down here. In case it breaks out, you jump in and then it dumps the other way. Okay, and once you get into position, you could tighten this stop up. Okay, tighten the stop up whichever way you need to tighten it up. These stops will not interfere if you have a successful play. It'll only interfere if the play goes wrong. Okay, so that's how we put stops on both sides. You can see buy stop, sell stop. Okay, works on both sides. So let's see, what do we need to cover now? We went over market orders, when to use them. Here's the formation. Okay, let's talk stop market. Why do we use stop market? Like I said, you don't want to ever, want to ever have to worry about getting skipped. So stop market. Let's see, what do we need to cover now? We went over market orders, when to use them. Here's the formation. Okay, let's talk stop market. Why do we use stop market? Like I said, you don't want to want to ever have to worry about getting skipped. So stop market. Very simply, if we were, trading and we were in a short right now, then our stop loss, let's say 6,900. We set our buy stop. Boom, we're good to go. Okay, so what are these boxes here? First, we have this box over here. It's called last, mark, or index. Okay, last will trigger your stop loss off the Bitmex price. All right, so if Bitmex hits 6,900, your stop will trigger. Mark, that means that your stop will only go off if the mark price hits it. That means the combination of the Bitmex price, the Bitstamp, and the GDAX or Coinbase Pro price. Okay. Index will mean your stop loss will only go off if the index price goes off, which is only the combination of GDAX and Bitstamp, or Coinbase Pro and Bitstamp. Okay. What is the downfall? The downfall is if you use index and the resistance breaks, you better believe you're going to be paying an extra 100, possibly even 200 points on like a big resistance play or something over the on the price on Bitmex. Okay, Bitmex pretty much always FOMOs in one direction or the other. Okay, so if you trigger on index, then you're really putting yourself at a big risk for some huge orders coming in and to get stopped out really late. If you're on last, you risk the possibility that Bitmex FOMOs too hard and the resistance doesn't really break. It only breaks here. And if you're on mark, then you're sort of a balance in the middle. Personally, I usually just stick to last. Close on trigger. Okay, close on trigger, pretty much, unless you're some type of very experienced trader and you know what you're doing, 95% of the time, close on trigger is checked on. Okay, just leave it on, don't worry about it. The only example, I'll give you an example here of when it should be off. Let's say you're playing a breakdown here and you think it's going to happen too fast for you to get in on a market sell. Okay, you're very certain, you see all the bearish confluence in the world, you know this rising wedge is going to break down, you want to enter right here. Okay, that's your support, your secondary support line or whatever. This is where you believe once the price gets to here, you want to get in. Okay, so you could set a stop order. We would have to do it down here. Okay, so we have our wedge here. This is the breakdown point. All right, you want to short at, let's say, 66.76. 66.76. You want to do a short here. Sell stop. Now what this will do is this will open a brand new short position for you. Okay, stop market. It's not close on trigger. It will open a new position for you. Okay, it's just be very careful. It's basically a it's a way to open a new order. Don't think of it as a stop loss. Think of it as a way to open a new order. Okay, so basically we pretty much always want close on trigger checked on. Right, I believe that covers everything. Those are the main tools that I use. I don't really use much of these other ones. I'm a very active trader, so I like to manually move my limit orders, my reduce only closes. I like to manually move my stops, and that's how I operate. Okay, hopefully that video was informative. Thank you very much, everybody. Have a great day.